Okay, Kip, it's been a while. As you can tell, I'm a fan. Let me just make sure that you're unmuted. You are now. And let me know if you're going to share your screen. Otherwise, I'll take it over. Welcome back, Kip.
Thank you, Dale. Appreciate it.
Welcome back, buddy.
Great being here. I like the two subjects you talked about here: luck and Dems winning. If the Dems are going to win next year, be ready to short everything. This market.
That's what I thought was going to be your fundamental reason for the end of the bull market.
Listen,
I agree as well with you guys on that.
Okay,
I agree with you as well.
So I've done this 34 years. So you know, I've had a lot of bad luck. I'll tell you that much. But I figured, you know, maybe I figured stuff out.
When we're wrong, it's bad luck, and when we're right, we're geniuses.
Oh, when you're wrong, you believe that you've done something terribly wrong to the universe, and there's a black cloud over you, and you get like 10 trades wrong in a row, and you're cursed, right?
Yeah.
But yeah, I have a little bit different approach. As you know, we have our own investing system that I created with my mentors 34 years ago, starting 34 years ago. And I'll just say this about why we've been right. I believe is because we saw Trump winning, and this is about the Trump economic miracle. That's what it is. People still haven't woken up to this yet, which is amazing to me that they can't see past either their bias or their TDS or whatever you want to call it, because I remember Reagan was the first president I had a chance to vote for. I was 18 in 1980. And the media told me that Jimmy Carter was the guy, and that Reagan was going to send us into World War III, you know, all the same fear-mongering we've seen with Trump. But, you know, the market, the economy took off. I became a broker in 85. The stock market doubled for my first 3 years in the business. The stock market doubled as Reagan's tax reform kicked in. So that's what's happening.
Yeah, so he was elected in 1980.
Right.
And the low in the market was August of 1982. I'm a bit of a market historian because I'm a dinosaur, and I was there for it, short IBM at, I believe we were 660 on the Dow Jones down there. So one thing I think that distinguishes, you know, history may rhyme. With Reagan, it lifted a lot of people up, not the 1%ers, Kip, all right? And that's the argument the Democrats have now, because the Great Recession wasn't so great for many people. Was it for you?
Well, no, but that's not Trump.
Right, exactly. Okay, but the recovery that we've had since then, even with the last couple of years, I guess you could say through employment numbers that more people are getting jobs at Home Depot and McDonald's and working 2 or 3 jobs to make it, that the middle class during this time frame has been decimated, which is different as Reagan lifted the middle class up.
No,
Don't
listen,
you think?
You just made my case for me. Look, it took Reagan a couple 3 years to figure it out. And then once he did, like I said, I became a broker in 85. His tax reform fully kicked in then.
All right.
And then the market doubled in 3 years. So the combination of tax reform, deregulation, and a pro-business environment, as long as he gets reelected, I mean, we're going so much higher. I mean, we're going.
All right, give me a number. Give me an S&P number. 4,000?
I'm a Dow Jones guy. 50,000 by the end of 2024, second term. And it'll probably be higher, because the sentiment is so incredibly bearish. You know, we got
that's very true. In fact, I had a guy on Monday who, you know, follows sentiment, and here we are pushing all-time highs, and there's so many bears out there that's part of his rationale for 3,250 S&Ps or so going into the fall, where we might have another correction. So it is very unusual. I have to hand it to you that there is a lot of skepticism, bearishness. Everyone's looking to sell it at 30.50 for the end of wave 3. So you have that definitely working. People aren't euphoric at all, are they?
No, and there's a macro event globally that's happening right now that I hear almost nobody talking about, and we've been focused on this for about 1.5 years, and is that globalism is dying, thank God, being kicked to the curb, being replaced by nationalism, populism, everywhere we look, all over the world. I can name you 12 countries this is happening in, okay? Trump didn't start it. You know, it started in Hungary and Poland and then Brexit and then Italy, you know, Trump and all this, right? So this is hugely bullish because
Why?
we're taking down big government, right? The elites that ran everything are being kicked to the curb. It is no accident, by the way, I don't think, that you're seeing some of these pedophiles now that are being arrested, right? This was the arena they played in. All these criminals are being taken down, being replaced by exactly what's happening here in the U.S. Lower taxes, deregulation, pro-business environment. The regular people in a populist movement, right, are reaching power. And in this kind of environment, and it happened, look at Australia. They just, as much of a socialist country as they are, they realized that it wasn't working for them. So they elected a Trump-like guy. Their market's now at all-time highs as well. So this is a movement that's going to take at least a decade to be fully, I believe, reflected into the markets. Man, this is the bull market of a lifetime. This is the bull market of our lifetime.
Do you think that Jay Powell should be demoted?
Oh, I don't know. You know, I think Trump won again. Look, nobody said this yesterday, but this is what Trump was saying last year. Of course, he was right again. Rates should never have been this high. 10 years going to 1%, probably below 1%. Because you look at global rates, I mean, we're the most stable country in the world. Why are our rates so much higher? From a common sense point of view, what sense does that make?
Okay. All right. So do you believe that, you know, this move with all these bonds, you pay attention to all the bonds that are now negative rates? And do you think that, so 1% isn't quite negative, but free money for a long time, huh?
I'm not smart enough to understand that, Dale. That's why I turn to guys like you to help me figure that out. I don't get it.
Look, no one's ever experienced this before in their lifetime, even if you're 100 years old. These interest rates, I think, date back these levels to the Civil War, Kip. So, I mean, we're like at 200-year levels here.
No clue, man.
100-year levels. So, you know, anyway, so being as bullish as you are, the stock market is also a market of stocks, a market of sectors. Based upon your bullishness, do you see rotation happening and favor certain sectors over others?
Yeah, I think in a market, this is a momentum liquidity fueled bull market. And these are the most powerful kinds of my career, at least, and the kinds that I've studied over the history of the stock market. And you want to be, you know, especially in this environment, you got to be in tech. And the semiconductors have led up and down. So we're in semiconductors, we're in biotech. You want to be where the momentum stocks are right now. And of course, also, we've got this major breakout taking place in gold and the miners. And nobody is really, maybe you guys are talking about it some, but most people are not even talking about, you know, GDX, the miner ETF, closed at the highest level since September the 30th of 2016 yesterday, and nobody's talking about them. I like that group a lot. Inflation is going to come roaring back. I don't think there's any doubt about that.
Okay.
That's what they want, right? They're going to get it.
Okay, so we have monetary conditions working here. Do you think that we're going to run into any problems in September with continuing resolution and funding the government? I think that, you know, we always do a dance around it. Do you think that going into this year, it might be different because of how polarized Congress is?
I don't really follow those events. What I look at, Dale, are the market internals. This is what my mentors taught me.
Okay.
You know, the market internals are the foundation. So, you know, new highs, lows, up, down volume, advanced decline, and a few others that we look at. We look at the trend, of course, and, you know, put call ratios, these kind of things. But right when the market internals are as strong as they've been for the last year, you know, any kind of reversal is short-lived. Now, if we start seeing, for example, if we see like an entire week of negative market internals, we'll be out of our positions.
What are the main internals that you look at? Advanced decline?
Up, down volume?
Up, down volume?
And 52-week highs to lows.
Okay, and they're all confirming new highs here?
Oh, all conforming, all at new highs, all-time highs.
Okay.
And you know, this is something that, again, my mentors wrote it down and tracked it on paper every day. This is what they did. And they taught me some really good habits when when I was 23 years old. I'm 56 now. It's hard to believe I'm even saying that.
Okay.
But, yeah. So the internals are.
You're a young guy. You're just a pup, Kip. So there are certain momentum indicators I follow, and then if you could see my screen, the last confirmed high on the monthly chart was January 2018. Okay, so that's quite a long time, and then we had that little pullback, and then we had a rally to new highs before the sell-off late last year. Okay, and that was a big sell-off, and now we made a new high here, and I have a lower RSI, and this is a monthly. It's very macro, and now we're making new highs here, and the divergence is glaring on the monthly. And let's just go. The divergence is glaring on the weekly, showing the same thing, making new highs, not even close. So we're diverging on some momentum indicators, maybe not the internals that you're looking at. Does that matter to you at all? I mean,
just not something that I follow, and I listen to you guys, and I want to pay attention to these, but it's not part of my investing system is made up of 12 screens. It's 70% fundamental, 30% technical, and right now we're at 10 out of 12 screens flashing bullish. And we're almost 11 to 12. We're just a little bit overbought right now. If the markets were to pause for probably another week or so and not do a lot, we would go to 11 of 12 screens. It's only happened twice in the history of our system.
What's your average duration of your holds on positions, Kip?
Boy, I don't have that. I can tell you that I wish I had sold these positions when we had big gains last year before October, November happened, December happened. That was a big mistake because the internals broke down. I violated my own system, and it really cost us. We still beat the S&P 500 again. We beat the S&P 500 15 out of 16 years. We won again last year. We're up double essentially this year. But when we have 10 out of 12 screens bullish in my system, it's back up the truck and buy.
Why did you decide to ignore your system? Could it be that your bias long-term is just so bullish that even your own work was telling you to raise cash and you said, oh, no, the big picture is still good. What did you learn?
I bought into all the analytics that were out there. And there's some great ones now that say that, for example, what I learned, I'll answer your question first. What I learned was you got to be disciplined, man. The best of us can lose our way and lose our discipline. And every now and then I think the universe gives you that wake up call. And that's what it was for me. So we're locked and loaded right now, but I will tell you again, if our system starts to break down, we won't stick in our positions. We have 12 positions right now. We use leveraged ETFs and growth stocks. And right now we're fully invested.
Okay, Kip. So your self-discipline, next time you get something like that, will you let me know?
I will absolutely let you know, my friend.
Okay, so you're bringing up some of the ETFs, so you're probably long GDX, right?
long NUGT, the 3-time leveraged ETF for the miners.
Oh, Nugget. Okay, I'm familiar with Nugget.
Yeah, we don't. My goal is not to just beat the market. My goal is to crush the market. I mean, I make no boast about it.
Okay. So just looking for a nugget here because it looks like gold isn't done. A lot of people are saying there's a double top here. I haven't looked at nugget for a while. This is because it's a weekly chart. Okay. All right. Possible little double top. You have targets for something like this when you're long term?
Yeah, long term. The breakout, what's happening now in the miners and in gold reminds me almost exactly of 2002, 2003, which is when I first, in my newsletter, when I first recommended the miners, and they just went on a tear. This environment looks and feels just like that for gold and for the miners. And it was an environment of good growth, right? But lower rates. And then the market took off. If the Fed had not hiked rates 17 straight times from 2004 to 2006, we wouldn't have had the financial crisis that you were just talking about a minute ago. But this is the preamble to that, and this is really when you want to own silver. Silver's got some work to do. Silver's got to get back above a lot. It's got a lot of resistance ahead, but gold is broken out, as have the miners.
Okay, so any feeling on what's happening in the energy sector? They're do you like that sector as well? Been under some pressure, but you know, I was always told that when the market's really rolling, it's techs and oils that lead. So what do you think?
I
Oils.
agree. And for us, we do a lot of relative strength chart work. And for example, since beginning last November, the miners began to outperform gold. And that was the buy signal for us. And so we're seeing now the same thing in energy stocks. Energy stocks for the last, really, they've had, I believe it's since last October, energy stocks have been leading oil. And again, that's the buy signal you want to look for. You always want to see the underlying equity outperform the commodity itself. That's the buy signal, and that's happening both in energy and in the miners right now.
Hey, look, you're getting a new subscriber.
Well, thank you, Dale.
I don't know, I never did this before, but you're definitely part of my intelligence gathering universe. So you're very welcome, Kip. So everyone here, it's Kip's home page here, and you can learn a lot about him. I've already done ask Kip about his journey. And Kip, so what's your service here? I see you offer a free blog. Are you, besides your blogs, you're running money, you're managing money as an RIA, or what's the business model again?
No, just purely a publisher. I published 3 different letters, and that's what I've done for 15 years after I left Wall Street. And that's it. I have the VRA letter. We have our options program, and another one that we're launching right now.
Okay. All right. So interesting. So it's really, do you send out alerts, or people just would read them once a week or every day? Or tell us a little bit about the VRA Insider.
It's a daily update. It comes out. As a matter of fact, I just sent the one out this morning before this interview started. And then many times, you know, if there's something happened, then I'll send out more than one update a day. But it's at least once a day. And we have a 2 free week offer. Anybody has an interest, come and check it out. See if this is a good fit for you. It's not for everybody, because I cannot.
You're aggressive. I mean, you come right out and say it.
Yeah.
You're aggressive. What's the worst drawdown since you've been doing this that you've had? And I know we've had a bull market, but there have been periods of, you know, 10, 20% corrections. I'm not even going back to 2008. What's the worst drawdown on your aggressive portfolio, say in the last 3-4 years?
You know, I take a lot of pride in being out of the market during big corrections. And again, that was not the case last year. We were up big going into October. So the biggest drawdown I've had has been this last year. But we stuck in. We were aggressive buyers in December, especially December 24th at the bottom. And we averaged down on our position. So it really saved us. But the drawdown was about 30%. It was painful.
Okay. Yeah, I've been there. I've experienced actually 100% drawdown at certain times in my career earlier.
I'm with you, brother.
Okay, so Kip, stay bullish. The economic miracle led by nationalism. Let me just ask you one thing. How do you feel about the dark side of nationalism, which is something, and how does it differ from the nationalism that the world went through in the 30s?
I mean, Dale, I just have to laugh at that because, you know, I'm just I'm a middle of the road guy that happens to be. I mean, I'm also an independent, by the way. I voted for Democrats just like I have Republican presidents. But there's insanity taking place on the left, absolute insanity, and that's just that's the way I see it. But the people that I know that are like Trump supporters, we're just good, family-loving people that want to see our kids have a better chance to succeed than we did, or at least as good a chance. And we're honest, we're law-abiding. We have no interest in being a brown shirt. We're not Hitler lovers. I mean, it's just crazy.
I'm not saying you are, but I you know, I never implied that. I just said that there are tinges, just like there are tinges, and to you, the whole thing, anything left, is evil.
No,
but there are tinges, right-wing fascism type of things that are not exactly humanitarian.
Well, Antifa is completely driven by the left. They're the ones that are beating the crap out of people, right? I see no Republicans doing that. Nobody in the right. So, you know, you got to really be careful. I think be careful who you listen to in the media. Do your homework, make your own decision. But it's a great question, and it's something that, you know, obviously, if that's why we need a strong two-party system. We don't want to go too far to the right. You know, that's dangerous. That's why we need the Democrats to get their act together and stop imploding, because that's a healthy system when you've got a healthy two-party system.
Well, maybe we'll get a third going into this election. What do you think? You have a libertarian. How come the libertarians in this environment can't put together a good candidate that can make a difference like a Ross Perot did?
Right. Well, I was on the board of the Libertarian National Congressional Committee for a couple of years, and I saw it firsthand start to change, where it deviated from being just libertarian to it started attracting some crazies. I mean, real crazy people got involved because they thought, well,
you mean like John McAfee, who wanted to get the nomination I've interviewed John. Anyway, you know, it'd be nice because I have a lot of libertarian views. Okay, and you know, I think a lot of Republicans do as well. You know, they're fiscally conservative, but they want the government out of our personal lives.
Right.
So,
and that's only getting worse, and that's a real concern that I have, along with law enforcement. Look, I recognize what's happening here, and you know, look, Trump's a big law enforcement guy, and they're answering to no one right now. That's a dangerous environment. Those are the kind of things that we can agree on. No privacy, law enforcement overreaching. You know, that's why we need a strong two-party system, at least, right?
Yeah. You know the expression, what good is money, it can't buy you happiness? What do you think of the opposite? What good is happiness? It can't buy you money.
Well, money, I'll answer it this way. Money may not make the world go around, but it certainly helps pay for the trip.
Oh, that is beautiful. I'm going to end it on that. Can I use it?
It's yours.
All right, Kip, you're my trading warrior brother. Thanks so much for hanging out with us, and 50,000 Dow by what was the year?
End of Trump's second term.
End of Trump's second term, 50,000 Dow.
If he loses, sell everything, go short everything.
And go to where? New Zealand? Find a nice little haven to hang out in?
You know, just don't go to the Dominican Republic, apparently.
Okay. Kip, good hunting. I hope that all your subscribers continue to prosper under your leadership. And thank you for, you know, in this environment, it's great to hear a guy with conviction, and instead of people that say, well, if it goes up, it might hit resistance and it could go down, but if it goes down and bounces, it could be okay unless that bounce fails and then takes out the low. You know, you just call it like you see it, and congratulations on recovering from that drawdown. Thank you for your transparency. We've all lived through it. And, you know, I don't know about you, Kip, but I learned the most from the mistakes I've made in trading and in my life.
In the valleys, always. You learn nothing at the mountaintop. You learn everything in the valley.
Okay, buddy. Everyone, Kip Herriage, and you could also follow Kip on Twitter at Herriage, and check out his website. And there's an aggressive stock bull, one of the most, I call him a super bull, and that's exactly what he is. He's also a super guy. So thank you, my trading warrior brother.
Same to you, Dale. One of the great guys in the business. I always appreciate the opportunity to come on.
All right, buddy. So that's a wrap for everyone. And hope that everyone, I'm looking for the end meeting here. I don't see it here, but that's going to be a wrap. Maybe one of my associates can end the meeting for me. I don't know where some leave. All I have is leave meeting. Okay. Well, that's going to be a wrap, everyone. See you for TGIF. Good hunting. Thank you, investing.com. Kip, you were live streamed on investing.com today. So I hope it generates some interest for you. And if anyone's still listening to me, I appreciate it. Let me look here. Trying to end the meeting. It usually shows up down here for me. Maybe I know what the problem is. It's my mouse. So I guess my teammates aren't around. So I'll look for it.